Okay, so in previous chapters, we talked about how we record things within the accounting system, which is all based on the accounting equation of assets equals liabilities plus stockholders' equity. So first we record journal entries for each transaction that occurs. And from those transactions, we can create our unadjusted trial balance, which is a listing of all our accounts and their balances. And then because we use accrual accounting, at the end of each period, we'll need to record some adjusting journal entries. And we combine our unadjusted trial balance plus these adjusting entries. That results in an adjusted trial balance. And then the next step is to prepare the financial statements based on that adjusted trial balance. So that's what we're going to do in exercise 4-3. So we see we've got the unadjusted trial balance, which resulted from our initial recording of transactions, and then we record some adjustments, and those adjustments resulted in the adjusted trial balance. So in order to prepare the financial statements, we're going to use this adjusted trial balance area of our spreadsheet. So if we go down to the first question, what we want to do is to prepare our income statement for the year ended October 31st. 2018. So the first thing to note is that the time period is for a period of time. We'll see when we get to the balance sheet, it's as of a certain date. So for our income statement, what we always start with are our revenues. And for this example, we're calling our revenues fees earned. Just realize that this is the same thing as sales or revenue. And if we look to our adjusted trial balance, we'd see that our fees earned are $800,000. Okay, then we move on to our expenses, and we're going to list each of them out individually. So the first thing we have is a salary expense. And we see from our adjusted trial balance that it is $529,000. And I put them as negatives because they're expenses, and I want to make sure we do revenues minus expenses to end up at our net income. Next thing we have is our supplies expense, which is $7,500. Next we have our depreciation expense, which is $6,000. And then finally we have miscellaneous expenses of $11,100. So if we add all of those together, we'll get total expenses of $553,600. And the result of our revenues minus our expenses will be net income. So if I do 800,000 minus 553,600, I get net income of $246,400. Okay, so once we do our income statement, we then can prepare our retained earnings statement for the year. So we want to do the retained earnings statement for the year ended October 31st, 2018. To prepare our retained earnings statement, what we're going to start with is our beginning retained earnings. So in this case, it would be retained earnings as of 11/1/17. And I call this beginning retained earnings. And where we find that is on our adjusted trial balance. We see that our retained earnings before any adjustments from preparing our retained earnings statement is $180,700. Okay, next we're going to add our net income, which comes from our income statement which is why we need to prepare our income statement before we can do our retained earnings statement. So do we do that? We have a net income of $246,400, which comes from our income statement that we just prepared up here. And then we're going to take out any dividends that we paid. In this case, we paid dividends of $25,000. So if we combine those two, we have a change in our retained earnings of $221,400. It's an overall increase because we had a large net income for the year. So if we do our beginning plus our net income minus our dividends, that gives us our ending retained earnings. Our retained earnings as of 12/31/18. And then I call this ending retained earnings. So we get ending retained earnings of $402,100. So if we can remember, our retained earnings statement is beginning retained earnings plus net income minus dividends equals ending retained earnings is the general layout. Okay, next, once we've prepared our retained earnings statement, then we have enough information to prepare our balance sheet for the year. So first thing to note is we see how our label is just October 31st, 2018. It's not for the year ended October 31st, 2018, because our balance sheet as of a period of any time, whereas our income statement and retained earnings are for a period of time, and our balance sheet is as of a point in time. Okay, when we do our balance sheet, we're always going to start with our assets first. And we want to list them in order of liquidity, or how quickly they can be converted to cash. So we're going to put our current assets first. Like I said, that's in order of liquidity. So of course, first is going to be cash because it's already cash. And from our adjusted trial balance, we see that it's $45,000. Next is accounts receivable. We hope to collect usually within 30 days because those are normally the terms, which are $119,200. And then finally we have supplies for $4,400. Make sure you're using your adjusted trial balance, especially for that supplies, because we started out with a balance and then we used some, and then we ended up with the balance of $4,400. So if we add all those together, we get total current assets of $168,600. Okay, so then we have non-current, or PP&E, however the company decides to call it. For this example, we have office equipment. We certainly hope that that lasts longer than a year. And the cost of that office equipment was $400,000. But remember, for long-term assets, excluding land, we're going to have an accumulated depreciation associated with it, which offsets some of its cost. So in this case, we have $62,000 of accumulated depreciation, which gives me total long-term assets of $338,000. So if I combine those two, I have total assets of $506,600. After our assets, we do our liabilities. Once again, we'll have a current portion. In this case, we have accounts payable with a balance of $20,500, and we have salaries payable with a balance of $9,000. So we have total current liabilities of $29,500. Okay. So if we continue on, scroll back up here to where we were looking. All right, so those are my current liabilities. In your example, you don't have any non-current, but just don't forget that lots of times you'll have non-current liabilities. So we'd have a total here. Your example doesn't have that, so you don't need to put that into CentGauge, but just be aware that that's a possibility. So then I have, if I add up my current liabilities and my non-current liabilities, I have total liabilities of $29,500. All right, and then my last section is my stockholders' equity section. So if we look to our adjusted trial balance, we see that we have common stock outstanding of $75,000. Then the other large part of our stockholders' equity section is our retained earnings, which is why we need to prepare a retained earnings statement before we can do our balance sheet, because we're going to take our ending retained earnings balance from our statement of retained earnings. So if I add those two together, I get total stockholders' equity of $477,100. And if I do my total liabilities and my stockholders' equity, I get $506,600, which is the same as my total assets. So from our balance sheet, we can see that our assets equals our liabilities plus our stockholders' equity. So our assets were $506,600. Our liabilities were $29,500. And our stockholders' equity was $477,100.